By now, you've seen the staggering sums of money that the hyperscalers are committing to spending on AI, not just over the past 24 months, but the upcoming 12 months, they're expected to spend a staggering sum of money. All in, it's close to $1 trillion. And many people are wondering what the payoff is here. Is there a plan to make this money back? And how long will it take? In fact, Equity Empire subscriber Jamie wrote in and said, would love to see a breakdown of the 4 major hyperscalers, Meta, Google, Amazon, and Microsoft. And are they poised to earn a return on all of this CapEx spending? And how confident, I think that's the key word, how confident is the market, and myself included, in these companies earning a return? And so we're going to be discussing that on today's podcast. And more importantly, I believe as we go through each one of these companies, all 4 of them, we'll find that each of them are actually in their own unique position to either capitalize rapidly or in some cases just maintain a healthy business that they've built up over the past 10 to 15 years in the cloud. We'll discuss which ones have what I think are kind of asymmetric, that's a term on Wall Street, or these exponential type returns on these, like unusual and unordinary type returns. There's actually one company out of the 3 of Meta, Microsoft, Google, and Amazon. I actually believe there's one company in the short term that could actually receive the biggest boost to their AI spending. It will depend on a lot of things going right for the company, but if they're able to pull it off, their competition will have no way to compete with them, and their product will get exponentially better, which will obviously lead to a huge return on the investment. And most of Wall Street is not talking about that. So we've got a lot to talk about on today's episode. We better just jump right into it. Now, of the 4 companies, one of them actually stands out because you have Google, you have Amazon, and you have Microsoft. And all 3 of those companies obviously have core businesses that are utilizing AI to a certain degree, either to paying clients or maybe it's running some of the back-end processes, like maybe over at Google, certainly Amazon as well. But the core feature of a lot of the CapEx spending for Amazon, Google, and Microsoft, that capacity inside of their data center is turned around and rented out. So I almost think of the GPUs that those companies bring in almost like a home builder, almost like an apartment complex builder, where they're building these apartments. They're sinking a ton of money into building the apartments in order to collect rent month after month for as long as those apartments are left standing. Similar type of business model with GPUs, where you bring them in, they're very expensive up front, but you're able to collect monthly toll payments month after month after month. And it is a very reliable business as long as the demand and the pricing on those GPUs ends up staying where it's at. And as we sit here today, the pricing, the availability, the demand for these GPUs is just off the charts. In fact, when you listen to Amazon and certainly the other conference calls, as soon as those GPUs can be turned on, they are immediately generating revenue for those companies. But there's one company out of the 4 that is doing something a little bit different, taking a little bit more of a risk, but as most of us know with investing, more risk often leads to higher rewards. And so that brings us to the first company that we'll talk about today, and that is Meta. Obviously, the owner of Instagram, WhatsApp, and Facebook. And Meta differs from the other 3 companies in that, at least at the current time, Meta is not leasing out its excess or any of its GPU capacity. In fact, they're spending as much money as like Microsoft and Google are on capital expenditures, a staggering amount of money. $70-80 billion planned for the upcoming year for this company. They spent a staggering money last year. But what differs is Meta's not out there immediately generating revenue from other companies, other startups that are renting that GPU capacity. Now, on conference calls and when pressed about it, Mark Zuckerberg said that that is certainly something that they could do at a later date. They certainly could offer the Meta cloud at some point. But right now, certainly just over the past couple of weeks, you've probably seen these deals that Meta has signed. They've signed a deal with NVIDIA for a certain amount of GPUs. They just signed a very large deal with AMD, which allows them to buy 10% of the company if certain conditions are met with AMD shares and Meta buys the amount of GPUs, which I think was 6 gigawatts of capacity from AMD, which is just a staggering amount of GPUs. It allows Meta to buy and own 10% of AMD for basically nothing. There's also a lot of rumors that they've partnered with Google and that they are going to buy a large amount of GPUs and rent a large amount of GPUs that are made by Google, the TPUs. And so Meta is playing the field across the board when it comes to GPU technology. They're using Google, they're using AMD, they're using NVIDIA, they're using inside of their own CPU category, they're using Intel as well. And they're not renting any of this out, at least at the current time. And so what is the plan here with Meta? We've obviously seen there has been a little bit of payoff already. Every time Meta gets on their conference call, they talk about how they had a 5 or 10% uplift in ad spending. The amount of time people are spending on the site is better. When you listen to the NVIDIA conference call or the AMD conference call, they're often citing Meta. In fact, in the prepared remarks of the NVIDIA conference call and others that I've listened to, they're often citing the success that Meta is having with their GPUs and their AI technology in their ad business, generating more money right away for the company. Well, that's great because Meta is spending an astronomical amount on these GPUs. They better get a return, because the other 3 companies that we'll talk about here in a moment are already receiving the return on that investment already from the moment they turn those GPUs on. So Meta should see a similar type of thing. But here's the thing that I believe Wall Street is completely missing with Meta. Meta has an opportunity that is actually bigger than I believe these other 3 companies. Now, Google you could put into this boat as well, and certainly Amazon and Microsoft, but I believe that Meta has the biggest opportunity here to completely transform their entire business with AI. And if they're able to do that and they're able to pull it off, well, it will actually put Meta leaps and bounds ahead of its competition, and in some ways probably make it way more money on this investment that they're making into these very expensive data centers. So let me explain what I mean by this. And so on the last conference call, I'm not sure if you guys saw this, and it didn't really get covered very widely, but right in the beginning of the prepared remarks, Mark Zuckerberg laid out the vision for the social media platforms that he owns for the next couple of years. He laid out a vision that doesn't exist today, but a vision that he believes will come very, very soon. And I would expect by the end of the year that the social media platforms that everybody uses, from Instagram to WhatsApp to Facebook, they're going to be completely different than they are today. Mark Zuckerberg laying out on his conference call, he actually said this, the very first paragraph of his conference call, he said this. So this is obviously the most important thing on his mind, but also when he was pressed about it and asked about it in the question and answer session, he doubled down on it. He said that Facebook was going to start to create content and become a deeper and more important part of people's lives. Because think about how social media works today. You pull up Instagram, you might scroll through your feed. You might hit the like button on a few things. These things are all obviously being, programmed, or there's an algorithm to, put your friends' content or the content you interact with the most, or the things that seem the algorithm believes is most important, that comes up top. And you scroll through it. You might hit a like. You might leave a comment. You might have a photo from last night, or you might snap a photo or shoot a quick video and post that to your feed. This is how social media has worked, more or less, for 15 years. really hasn't changed. The user interface has gotten better. The ability to post video and other forms of content has gotten a little bit better. You can edit your video oftentimes inside of the app, but more or less, guys, we're talking about the same platform with a couple of different uplifts when it comes to technology, video, photos, and different types of formats there. It really hasn't changed. What Mark Zuckerberg is dreaming up is a scenario where you log into your Instagram and there is AI generated content directed just to you. Could be a highlight reel, could be AI generated content that your friend sent to you. Imagine this scenario where it's your friend's birthday and you want to do something for your friend, but you're a busy guy out there. Imagine just being able to go to your Meta account and say, hey, it's my buddy Jeremy's birthday today. Find all the photos of us together over the years. He's a big fan of AC/DC. Let that be the soundtrack, and send that to him with a gift card to Target, and let me know when it sends. You press enter, and then Instagram goes off and does its thing, creates the soundtrack of the music you wanted, created a collage of all the photos with you and your buddy in it. It sends it to him along with a gift card. That's exactly the future that Meta envisions. What Meta also envisions is they want to take control of more and more of your daily life. They want your daily life to begin and end inside of these apps. So they're going to start to take control of your calendar if you allow it. If you want Instagram to have control of your calendar and understand what's going on throughout your day, help you plan different types of things, different communications that you might have, maybe even your inbox, your emails are starting to flow into your AI over at Instagram or WhatsApp or Facebook, whichever platform you decide. My guess is all three will work together in tandem. Now, other types of tasks, if you think about it, could actually be done inside of Instagram. Things like ordering food, things like payments, shopping, and certainly as the algorithms get better, customized AI content that is directed strictly for you and created only for you. This is the future. And some of you are probably sitting out there saying, this wouldn't be for me. I don't really want to have this. I'm telling you, I don't use Instagram that much. I don't even have a Facebook account. I'm rarely on WhatsApp, but I can see the addiction patterns of the people that use these platforms. The more addictive the content is, the more personalized the content is. Also, the more that Instagram knows about you from your calendar, from your job, from your emails, and all those types of things. It knows a lot about you now, but the AI is going to open up and allow Instagram to know even more about you. It's going to know when you eat lunch. It's going to be able to order the DoorDash for you. It's going to be able to order and call the Uber for you. It's going to reserve the hotel for you. It's going to respond to messages for you. This is the vision for Instagram. You could like it or not. I could like it or not. But the bottom line is this is the vision that Mark Zuckerberg has for Instagram. It's going to transform into less about social media and more into a life tool, one that absorbs more information from you when you go to the gym. Any type of heart monitoring or any of these kind of rings that people are wearing or the Apple Watch or the Meta glasses, it is now going to ingest and absorb more of that data and create more and more customized content for you inside of your Instagram. So it's going to become more and more personalized. Whereas when we go to these apps, it's more about the algorithm. It's more about what the algorithm is suggesting. Whereas in the future, by the end of the year, you're going to go to these social platforms. It's going to be more about you and what you have to do today. What is on your schedule today? What are you going to eat for lunch today? Whose birthday is it? What should the app do for that person since it's their birthday or it's your anniversary next week? What can the app do to make that day better for you? That is what's coming for these apps. And if you think about it, the investment that Meta is making here is a critical one. Because if we live in a future where social media is more than just posting and liking and commenting, and it becomes more of a tool for our daily lives, not necessarily for us watching, but for the vast majority of society and the vast majority of power users that Meta relies on, if they start relying on it for payments and scheduling and doing actual work and transactions, well, that is going to become a much more stickier and a much more powerful platform that Meta is building. And so they are laying the infrastructure for all of that because in order to pull that off, Meta needs the amount of compute where 1 billion people per day could actually get that done, because we see that over at ChatGPT. They have 800, 900 million active users that are doing similar, ChatGPT is doing similar types of things for them over there. And in fact, Meta's needs are even bigger because we're talking about video, pictures, photos, tons of interactions and transactions over a very short period of time. Meta's compute demands probably exceed, in many ways, the ones that we see at the large language model laboratories like OpenAI. And so Meta's laying the groundwork here. And if they are correct, if Mark Zuckerberg is correct in that these social media platforms transform into something far more useful and more utilitarian than they are today, well, where does that leave TikTok? And where does that leave Snapchat? And where does that leave the other competing apps out there? If they don't do the things for our lives and don't create personalized content and don't allow us to actually do things, well, those platforms all of a sudden seem pretty stale. And if they wanted it to keep up, they're going to have to invest in the same way Meta has invested over the past 2 years, or they're going to have to go to one of the other 3 companies that we are going to talk about on today's video and pay a hefty price for that, because that compute that TikTok would need or Snapchat would need would come at a hefty price that those companies, quite frankly, can't afford. So I believe right now that Meta is making a power move. They are investing in a future that doesn't exist yet on social media, but I believe if you take a step back and you look at social media logically and you say, how can AI make this way better? And you start to envision videos being created just for one person, or your ability to converse and talk to the social media app and say, create this post for me, send this to my friend, or have my calendar integrated with my social media site, and my social media site say, hey, you have a gap in your day between 12 and 1. I'm assuming you're going to have lunch. Do Chipotle's burritos are on sale this day, or Pizza Hut has a coupon that they're offering Instagram users for a free salad. Do you want that delivered at noon? And I just press a button inside my Instagram app, and now my lunch is taken care of. That is the future that is coming. That is how social media is going to evolve. It's evolved over the past 15 years, but it is about to take a new evolutionary leap, and Meta is going to take it into that version of social media, and they are going to have the infrastructure in order to pull it off. And their competition, most notably TikTok and Snapchat, they're not going to have it. And if they want that type of infrastructure, they're going to have to spend tens of billions of dollars in order to layer it onto their technology through one of these cloud providers. Or they're going to add it, and they're going to be years after when Meta is able to build it. And so this is different. This build out that Meta is embarked upon, this is completely different, but it is building a different era of social media. And I know we've gone through this with Meta before, right? Through the Metaverse, and we were all going to put on these glasses and live in these fantasy worlds. That was a fantasy. What I think Meta is working on now is much closer to reality. We can see that we could implement things that we are doing inside of ChatGPT or doing inside of Gemini or doing inside of Claude. We can imagine ourselves doing that inside of Instagram. And if you and I, talking here together, if we won't do that, if our work is too professional or we're not even on Instagram, I certainly can think of millions and millions of 15, 18, 19, 20-year-old young ladies and boys that will do it. I can think of a lot of people that I know when I'm at social events and they're sitting there scrolling on Instagram. I certainly can see, well, my God, if they integrated this app more into this person's life, they're already addicted to Instagram. They're already addicted to Facebook. If you started layering in more utility on that app where it did even more for you, ordered food for you, scheduled things, contacted people, responded to messages, actually did things for you, well, yeah, your addiction level at these apps is going to go even higher. And so the more addicted people are to Instagram and these social media platforms, the more advertisers are going to be on there. And I discussed one use cases where they can start pushing the ads directly to you. Knowing that you have a lunch hour that is free, they can start pushing you offers from either Uber or Uber Eats or certain restaurants, whether it's Chipotle or McDonald's or whoever wants to offer you food during that work hour. They certainly can do that. They know when it's your wife's birthday, they can suggest if you want to send, click here and 1-800-Flowers will send her flowers. It can do all that. AI can do all that. You need the infrastructure. You need the users, you need the distribution. Meta has all of that. They're laying the groundwork for it. And I believe, guys, we're heading into a brand new era of social media, one where Meta has dominated the previous 15 years, and they are about to dominate the next 15 years as well. Yes, business users will turn to an OpenAI or a Claude or a Gemini. And if we're trying to get real work done, we're probably going to use one of those applications. But when we're talking about the rest of society that is trying to take a break from their normal job or just feed their addiction to social media, well, Meta is going to be quite possibly, the only game in town. If you're looking for AI to entertain you, Meta might be one of the biggest and best games in town there. And so I think this investment for Meta, it's paying off a little bit in the short term through higher ad rates, higher conversions, better engagement, better recommendation engines. I think these things are all fine and dandy. I don't think they require 70, 80, 90 billion dollars worth of CapEx. What they're building this CapEx for is the next era of social media. And if Meta pulls it off, it's not only going to make the platform way better, and people already addicted to these platforms are going to become even more addicted and spend even more time on them, but it's going to leave the rest of the competitors in the dust. The TikToks and the other sites are going to look antiquated when they can't do anything other than serve you algorithmic content. Now, let's move to Microsoft, because Microsoft's in a familiar spot as a company. And first of all, we'll discuss kind of the obvious, that they're spending all this money. They're spending, $100 billion or whatever it is on CapEx. And a lot of it is going into, or most of it is going into their Azure data centers. And a lot of their Azure capacity is obviously going to existing clients that are building out applications. A lot of it obviously goes to OpenAI. They've signed deals with Anthropic as well. They're basically dealing with just about everybody over at Microsoft. And there's some advantages if you're an organization or you're the government or the military or you're an existing client of Azure and you're not running any AI workloads. Well, transferring some of that or layering on your new kind of agentic workflows or something, obviously a natural progression to start to use Azure. And as we work through the rest of these three companies, Amazon and Google to follow, that we have to understand that their cloud business, it's very much like a real estate developer. Think about, as you're watching this, you're a real estate developer. And most of us, whether we're a real estate developer or not, we can understand the economics of the business. If I were to start here today and I had $100 million to spend on building real estate, I would understand. I would spend that $100 million. After a short period of time, I'd have a large portfolio of houses and apartment complexes and buildings. But my payback is month to month. I'm literally only getting paid month to month as the rent checks come in. And so it's going to take a while for that ROI to show up, but I am making an investment for the longer term, and real estate investors are comfortable with that payback. The same thing is true with these data centers. And so as we look at across the entire data center business, not only applies to the big guys are unique because, as we'll talk about here in a second with Microsoft, they have this other business that certainly can be impacted and benefited with AI. But when you're looking at just the neo clouds, the CoreWeaves, Nebuous, IREN, TeraWolf, and these ones where they're just strictly a data center, well, the payback on those assets is a really long time. And that's what Wall Street is starting to figure out. And this is why these stocks kind of peaked back in October and November of last year and really haven't been able to get back to those peaks, because Wall Street is realizing like this is a good business, but investors aren't going to see a return on it for a long time. A long time could be more than 10 years. And that's a long time in Wall Street. And there is a lot of risk that you assume over that 10 period of time. Microsoft and the rest of these companies are in a little bit different position because they already had that existing cloud business, and now AI is a new part of that, and they have all these existing clients that will obviously trust them, and the scale in which they can build and launch these data centers obviously puts it in a very, very good position. Now, the one thing that is true about Microsoft and the rest of these companies, the minute these GPUs are turned on, they are sold on long-term contracts and they are paid for. And let's assume one of these AI companies goes bust or they run out of money. Well, there is a high probability and high likelihood that another company will come in there and absorb that GPU capacity. So there is some risk, there is some customer concentration risk, but it is mitigated given the fact that you have so much demand. But again, I want you to think about these data centers as a real estate developer. You are not going to buy $100 million of real estate in a year and let a year or 2 years or 3 years go by and have a return on that $100 million yet. That those rent checks only come in once a month. And there is maintenance, there is customer risk, there are people not paying. There's all these risks that can occur over the next 3 years. And so this is a risk that these companies are taking, but it's a calculated one. And in the case of Microsoft and the rest of these companies, they are actually in a unique position because they have another business model that they can rely on. And Microsoft, as I said at the top, finds itself actually in a very familiar position, one where Microsoft is not a leading AI lab. They're not at the frontier. I think we can look at Anthropic. I certainly think we can look at ChatGPT. Those two companies absolutely at the frontier, absolutely creating products and services that we just have never seen before, doing things with large language models that we haven't seen before. In fact, Microsoft implementation of AI is their Copilot, which they've attached to Windows or Excel. There is certainly some internal large language models that the company is relying on as it relates to Copilot, but they're largely relying on both OpenAI and in some cases Anthropic to make the Copilot even better. But this is a familiar spot for Microsoft because, as you recall, during the pandemic, there was a huge surge of people needing to video conference, and Zoom video really took off during that time, and shares of the company skyrocketed during that time. And Microsoft's answer to that was a product that they call Teams. And by most accounts, everybody hates Teams. They would rather use Zoom. They would rather use Google Meet. They would rather use FaceTime. They would rather even maybe pick up a rotary telephone in some cases. People hate Teams. But if you look at the usage of Teams and you look at the revenue it generates and the amount of stickiness that they've been able to create with a product like that, it's for Microsoft standards, it's very good. The question for Microsoft is that going to be good enough going forward? Can you have a subpar Copilot in Windows and in Word and on the side of desk? Is that going to be good enough? Are those employees even going to have a job in the future? Ones that need a subpar Copilot next to them? Or are the more powerful and more capable ChatGPTs and the agentic agents and even open source software like OpenClaw over the past couple of weeks, which has completely taken off, that I think is legitimately, I think everybody with a straight face could tell you legitimately that does more stuff than a Copilot. It's more capable and it provides a lot more flexibility than a Copilot does. The question with Microsoft is, are they going to take the leap that I just talked about with Meta? Meta is taking a leap into a new era of social media. It's not being discussed about in Wall Street. Wall Street is, quarter to quarter, and they're literally just figuring out the difference between a GPU and a TPU and a CPU. They're still figuring this out, and they're still trying to figure out what all this means. They're still trying to figure out, well, what's the difference between Anthropic and OpenAI? They're still trying to figure out if those companies are going to be able to layer ads and make money. Wall Street is 3 or 4 months behind. The question for Microsoft is, are they going to take the leap that Meta is taking, that they are going to transform social media into something brand new, something that we haven't seen before, the next evolution, if you will? That is what Meta is going to do. So will Microsoft make Copilot essentially a worse version of Zoom or Google Meet, but it be good enough, and that their lock-in with organizations will be enough to make the Copilot worth paying for some organizations? Or is Microsoft going to make Copilot the definitive way that anyone running on Microsoft systems interacts with AI? And will it become the agentic window and the agentic agent and the agentic control panel for organizations? Because that's what it has the potential to do. Your Copilot has the potential to access your Outlook, your Excel sheets, your PowerPoints, and it has the access to orchestrate all of that. It doesn't have to be Microsoft's own large language models behind these things. It can operate actually much like OpenClaw does. So I have an OpenClaw running on a Macintosh computer, and it runs on Claude Opus, but Claude Opus actually only does a very small amount of the work. It kicks some work off to open source, kind of very cheap, and in some cases free large language models. It kicks some works off to Gemini. It kicks some work off to OpenAI, depending on the model, depending on the use case. It's actually very much an open platform for large language models to do things. And the OpenClaw is just kind of orchestrating all of that and allowing me to do a bunch of different work. And depending on what the workflow is, if it's images, I'm using Nano Banana. If it's research, I'm also using Gemini in a lot of cases because their research function is very good. If I'm looking for the latest news or breaking news, I might look at Grok's API because they have a fire hose of data coming in as it relates to X. Copilot has that ability where you might have internal data, private data at an organization. You might even have like a private LLM that they've forked off an open source project. You might want to tap into some of the frontier, the Opus and the brand new ChatGPT. You might want to layer that in for certain types of tasks. You might have general customer service that's back and forth, very mundane kind of answers, almost like an FAQ, if you will. That could be run on a less frontier model, a trailing edge model, if you will, that has been like really fine-tuned and trained, maybe potentially running locally. The Copilot from Microsoft has the opportunity to orchestrate all of that, connect into all your different services that you're using inside of your organization. Maybe you have Slack. Maybe you have other APIs and connections with other businesses and other, maybe even Adobe products or something like that. The Copilot from Microsoft has the ability to orchestrate all of that. And the good news for Microsoft is, yeah, you have companies like OpenClaw, and we didn't really talk about it when we talked about Meta, but they acquired a company called Manus, which is also making one of these, what I would call, some people call them AI wrappers. It's an interface on top of a large language model that allows it to do a few more things. I view it as kind of the orchestration layer of the AI. It sits above it all and then makes the decision which model to use, which model is the cheapest and could do the job, which model for really hard tasks needs to be used, maybe for coding or multi-step products or projects, or in some cases, if you're watching this on YouTube, Claude is the one generating the PowerPoint slides. Like, I don't actually make these PowerPoint slides. Claude does that, and Claude has a unique ability to do that. And so if I'm passing that job off to the AI, it would be nice if my orchestrated layer would do that for me, my Copilot, if you will, where it knows I record this, it knows I need PowerPoint slide, and it sends that to the appropriate AI. That's where we're at right now. And there's certainly open source, there's Manus, there's many others that are playing in this space. But right now at the enterprise level, we're talking about the high-end companies. Nobody is running versions of OpenClaw at, Fortune 10 and 15 companies. They're all running Windows. They're all running Outlook. They're all using Excel. They're all using PowerPoint, and they're going to continue to do that. A lot of them switched from Zoom to Teams, even though for most accounts, it's an inferior product. And so Microsoft has the ability here to turn Copilot into one of the biggest and best products in terms of enterprise AI orchestration. Will they do it though? That's the question with Microsoft. And that is a tough question to answer. I'm not exactly sure if they're going to be able to pull it off. But what I will tell you is, given the amount of money and the amount of effort is required to do that at the enterprise level, Microsoft does have some time to pull this off, probably through the rest of the year. Same thing with Meta. We talked about how they're going to transform social media. They're going to have to layer in all these capabilities that currently aren't in social media. They have time because they have such a dominant position inside of social media, and their users are addicts. So, if you're on Instagram and Facebook and these apps large amounts of times through your day, you're addicted to them. You're not going to quit that addiction anytime soon. And so these companies have time for this. And I think you could say the same thing for Microsoft. Its users are more or less addicted to the platform. Its enterprise users are locked in. And so Microsoft has its ability. So if I was investing in Microsoft, and I am, full disclosure, I am invested in Microsoft, what I'm looking for is progress on Copilot. And if you read between the lines of what the CEO says and some of the more technical employees over there, I think they get it. I think they get it over there. It's just a large organization. It's going to move at a slightly snail's pace. They realize they have some time to get this right, that the open clause can provide some of the use cases and the excitement and give them some ideas of what Copilot can be. And they have time to implement that at a larger enterprise level. And so if you continue to see progress there from Microsoft, that gives you even bigger upside to this spending. So in short, with Microsoft, the spending that they're doing with AI, every dollar that they spend is going to be gobbled up by OpenAI, by Anthropic, or by another company inside of their ecosystem that is going to utilize that. The upside, the big upside for Microsoft, the transform it into a $5 to $10 trillion company. In order for that to happen, Copilot needs to be the orchestration layer at the organization level for AI. I need to be going to my Copilot and being like, hey, you see my schedule today. What the F do I need to do? Can you send out any emails that are not urgent and don't need me to do it? Oh, and I have a presentation I got to give in about 18 minutes. Can you throw that together for me real quick? Press enter, boom, Copilot does the work. Okay. The open clause can do that right now. Copilot certainly has the capability to do that. Will Microsoft be able to pull that off? I certainly think they can. Will they? That's the question. And under what time frame they do it and what competition emerges is the other question. But as proof during the pandemic, competition emerged when it came to Zoom video and other types of platforms, and even Slack channels and all this type of stuff certainly hasn't impacted Microsoft. So in some ways, they don't necessarily have to turn Copilot into this transformational product, but it has that potential. And that's why I remain bullish on Microsoft. Now, switching gears, we'll move to Amazon. Amazon, and I'll speed through kind of the first argument with Amazon because it's very similar to Microsoft. Any GPU, any AI system that Amazon is installing inside of their data center immediately is rented out. So it's like a real estate developer that has all these people that are trying to rent apartments or find a house to live in. The minute that house is ready to be moved in, somebody moves in and starts paying rent. That's the environment that we are in. It looks like to me, based on what I am seeing inside of the developer communities and the AI communities, that is something that is going to last for a very long time, at least through the end of the year. Into next year. It would shock me if this didn't last for many years, well into the 2030s, if you will. So Amazon's in a very good spot. Their AWS and their cloud already has obviously a lot of existing customers. And if we saw on the last time the company reported their earnings, the revenues accelerated over at AWS largely because they're getting a lot of things on board there. Now, what's interesting about Amazon, and this applies to Google, who we'll talk about here in a second as well. But Amazon is interesting because they have custom silicon, custom chips, computer chips inside of their data center. Now, Amazon has two actual custom chips. They have your CPU, which is your traditionally competed with Intel and AMD. These are your typical chips which ran the data center before AI came on. These handled all the tasks inside, whether it was streaming Netflix videos or moving files back and forth or sending emails. It was handled by a CPU. And so they've actually invested heavily in that area, and they've developed a lot of chips that work very well for them and are cheaper, not only for them, but for their clients as well. And in fact, I think a lot of the workloads that go through the traditional cloud over at AWS run through Amazon's chips. Now, over the past couple of years, they've really invested in these AI chips. They have a Trainium chip, which is more for AI training, but they also have kind of an inference chip for running different types of processes. And other than Google, Amazon is the farthest along here with their chips. And so it's giving them competitive advantages. It's allowing them to sign these large deals. They signed a very large deal with Anthropic. And by all accounts, it looks like Anthropic's pretty happy with that arrangement. OpenAI just got a very large investment. We'll put that in air quotes from Amazon. That investment is largely tied to OpenAI turning around and spending that money on AWS credits. So Amazon is not necessarily going to reach into their pocket and pull out $50 billion and give it to OpenAI. It's that OpenAI is going to use these chips and use these data centers that Amazon has already built. Now, of the four companies here, Amazon has been very aggressive more recently in standing up data centers. They obviously have actually the most experience doing that. And by most accounts, Amazon stood up some of the largest amount of capacity last year, and they're going to stand up almost more capacity than everybody this year as well. And so Amazon is very well positioned as, again, think about these chips and AI chips as like a real estate developer that has a ton of demand, a ton of people want to move in. Amazon is very well positioned right now to be able to capture a ton of that demand. They're going to stand up these data centers, and the minute they're stood up, they're going to generate revenue for them. Now, the wild card, all these other companies have wild cards. The wild card with Amazon is they stand up so much compute. And the beauty about Amazon is they actually don't need to be at the frontier of whatever the AI technology is out there. So if you look at Meta, I would argue within a year, they need to be at the frontier of AI and social media. AI slop is what some people might call it. AI slop is going to be potentially a bigger business than anything in AI. People doom scrolling AI content is going to be huge. People consuming AI short form videos and long form videos, people creating their own AI videos, just slop. That is going to become a $1 trillion business for sure. And so I'm very excited about that. And Meta needs to be at the forefront of that. If they lose the AI slop business to somebody else, then Meta stock will tank. If you look at Microsoft, they do need to be at the forefront of enterprise AI. Now, they can rely on Anthropic, they can rely on ChatGPT, they could have a hybrid approach where they're relying on 2 or 3 of them, which appears to be, at least at the current time, what they decide to do, but they need to stay at the forefront of enterprise, whether that's enterprise handled mostly by human labor or agentic labor. Microsoft needs to be there. Okay. The difference with Amazon is they don't actually need to be at the forefront of AI technology. They can be a platform for it. Their AWS data centers could absolutely be a platform for it. But the critical thing for Amazon, and where Amazon goes from, off the top of my head, I think it's maybe $1.5 trillion company or somewhere in that range. For Amazon to get to a $5 or $10 trillion company and become one of the most, it's already one of the most valuable companies in the world, but Amazon has the potential to maybe be the most valuable company in the world, surpassing Apple and Nvidia, Microsoft and Google. This company actually has the potential. That is because they don't have to be at the forefront of the technology. That's because Amazon can apply the forefront of the technology onto their own business, which essentially nobody else is competing with at a large scale, at least here in North America. And that is obviously, we're talking about their e-commerce business, which is generating nearly $500 billion, $500 billion a year in terms of revenue. It is the biggest grossing revenue businesses in existence. Amazon's e-commerce business is the biggest grossing revenue business in the world, at least when we're talking about public companies. We're talking about over $100 billion every 3 months that the company generates from e-commerce. So think about AI. If AI can make its e-commerce business 0.5%, 1%, 2%, 3%, 5%, 8%, 10% better off of $100 billion, $150 billion, $200 billion eventually, we're talking about a massive payoff. AI has a massive payoff on e-commerce if it makes delivery times cheaper, if it makes making ordering even simpler, if it increases the profit margins even a fraction of amount. Well, Amazon stands to make a fortune. And so that is what Amazon is going to bet on, that the AI gets so good that it's delivering the packages. It's driving the trucks. The robot gets out and drops the package off, that it helps speed through the logistics of ordering, that it helps create other products and other ads on the platform that generate more sales at a higher margin. That is the golden goose over at Amazon, is the e-commerce business. I know we're all focused on AWS. Wall Street tends to only focus on it. There's a belief that they only make money on AWS, but if you pull up the Amazon financials, their e-commerce business is wildly profitable. In fact, give it another 24 months and the e-commerce business at Amazon is going to make more profit on a quarterly basis than AWS. The e-commerce business is what will transform this business into a $5 trillion company. And they're going to do it by automating, by robotics, by automating delivery, not only from the cars driving themselves, which they can do today in regulated markets, but also a robot or, a machine getting out and actually delivering the package. By removing the humans from that operation, the company probably can expand its e-commerce margins by several points, if not maybe a double-digit number, 10, 12, 13%. And 10, 12, 13% on $500 billion, because that's the type of revenue we're talking about with this e-commerce business. If you add 10 points of margin to that, then yeah, every dollar that Amazon is spending on their AWS cloud will be paid back instantly. And so of this group, Amazon is maybe one of the best positioned because they don't have to develop that technology. They don't have to be at the frontier of AI. They just need to be able to use it to make an existing business even better. That's what's very exciting about Amazon. Now, the final company we'll talk about is Google. Google's in a very unique position. Google, out of all of these companies, has a vertically integrated stack, which I don't think anybody is going to be able to compete with. Other companies have tried, even Meta has tried to get to the area where they are with Google, where they have the distribution through their search engine, through YouTube. They're trying to develop their own computer chips through their TPUs in partnership with other companies, including Broadcom, and rely less on the NVIDIAs and the AMDs of the world. They own the data centers in where those GPUs rely. They own the customer. Google owns the entire stack. And so it leaves Google in a very unique position. Now, Google, like Meta, is going to have to continue to evolve its search product. But as we've seen over the past year, recall that we were sitting here a year ago and people were assuming that Perplexity was going to take over all searches and Google was going to go away. In fact, Google was probably closer to a 52-week low than a 52-week high this time last year. Well, that completely reversed itself. Perplexity's search traffic has fallen off a map. In fact, most people don't even talk about it when they're talking about AI companies, and Google stock has been the best performing essentially of this group. They continue to modify and change search, but what they have found is that Google search becomes better with AI, that people talk to it more, give it more intent, more indication of what it wants to do, which makes advertising even more profitable. So the more I spit into Google, the better it can spit out ads. And so Meta is obviously banking on that, and so is Google. So Google's core business is very, very durable, even as we move into a world where there's other options for us when we're seeking answers for things. We can pull up Grok, we can pull up ChatGPT, we can pull up Claude, and there's certainly people going to do that, but there's going to be a large segment of the population that is still going to rely on Google for this type of thing. And so there's still some challenges there. I won't pretend that Google can just sit back and relax and watch all of its search traffic continue. If I were to compare Meta's core business of social media versus Google's core business of search, and if I were to bet on one being more durable than the other, I would still place my bet on Meta, that people are so addicted to their follower count and their posts that they've made on that site in Instagram and Facebook. They're so addicted to that. And there's actually not that many alternatives. Once you have a platform built or your profile built on these social platforms, it's not like you could, you can spin up a TikTok or spin up a Snapchat or whatever, but you start from zero. So unless you're already famous or whatever. So for most people out there, once you're ingrained and once you're locked into that ecosystem, you're not going to leave. A Google search is certainly less durable. Instead of taking my search query or whatever I have to find, instead of taking it to Google, I can easily take it to somewhere else. And so Google has some challenges there. But here's where I think Google wins. It's not being talked about a whole lot, but I think Google wins in they are absolutely going to have a frontier model which is considered the frontier. So as we stand here today, you have Claude's Anthropic, which is their Opus model. You have ChatGPT, they're on 5 point something, essentially their flagship model. And Google is operating on Gemini 3, 3.1, one of these. And depending on what you're trying to do, and depending on your task, one certainly might be better than others. And I think as we move through AI, that is going to become more and more the case. That as we come, and I'm not looking down on somebody that is addicted to Instagram, because I'm addicted to these AI models. I'm getting into them and trying to figure out what they do best. And what I have found is, over the past several months especially, is that they are becoming more capable, but at the same time, different at the same time. So they all increase their capabilities, but I don't believe that it is happening across the board. Gemini does things very well, does things in some ways that ChatGPT and Anthropic can't do. And so if you have specific use cases, particularly around images, I found, and especially around video as well, Google, with their ownership of YouTube, obviously has the best video and image generation training data out of anybody. And so I think that's going to continue to be a huge advantage for them, particularly as we move AI out of just the text chatbot kind of era into something that is more multimodal, that uses photos and images and videos, and we're using it to create these types of things. In fact, if you're on Anthropic, you don't even use it for any type of image generation. Like image generation over at Anthropic is terrible. You would use Midjourney, or you would use ChatGPT, or you certainly would use Google and their Nano Banana product, which is essentially their Gemini version of image generation. I think Google is going to have very specialized and tailored large language models on kind of the fun and cute side that certainly has, military use cases and very serious use cases. Image generation, photo generation, video, that is going to become huge for them. They're going to be doing stuff on the DeepMind as it relates to medicine, as it relates to exploration of different types of drug discovery and those types of things. They're absolutely going to have a lead there. They're going to have a lead in terms of data access and the ability to comprehend that data, because Google has been indexing and comprehending data for as long as anybody on the internet. And so they're going to have advantages over the large language model labs. And on top of that, the thing that applies to Google, Amazon, and Microsoft is they're going to have plenty of clients that are going to want to access some of these specialized models. And so you're going to use the Google Cloud for that. Google is also in an advantage because they have a core business, a core advertising business that in my opinion is only going to get better. So even if search, if the percentage of traffic going to search flattens out, which certainly seems to potentially be the case, but if it doesn't get any bigger, the amount of search traffic that goes there that then turns into a monetizable click, I believe is actually going to go higher. I also believe the amount of money advertisers are willing to pay for certain types of clicks or interactions is going to go up in the AI era. Where if somebody in the past said, hey, I need car insurance, and they press enter on Google, you're presented with whatever car insurance companies are willing to bid at the top. The Geicos, the State Farms, they'll show up and they're relying on you to click it and then put in your name and your address and get a quote and eventually check out at their website. Well, in the future, you're going to tell Gemini, I need car insurance. And Gemini, depending on what it knows about your life, it probably already knows what car you just bought. It knows how many miles you put on the car. It knows your previous car policy. It will then go shop around and present you with quotes, where now all I have to do is click a button. In the past, I had to click a button, fill out a form, get a policy. I had to, sign up for State Farm. I had to log in. In the future, I'm literally just going to say, I need car insurance, and I'm going to press enter. Then I'm going to be presented with some options. Click a button here. Policies secured. Done. They already know my name. They know my address. They know what car I drive. So those are the ads that are coming for Google. In the past, Geico would pay a lot to get you just to click to their website in the hopes that you get a quote and then you buy from them, that you're not just quote shopping. I don't just click. I get a quote from Geico and I'm like, let me go check out State Farm. And maybe I end up going to State. Well, Geico had to pay for that traffic. In the future, Geico's going to just pay for me to click a button and get a policy. And they're going to pay way more for that click. They're going to pay way more to be at the top and have the most competitive quote in the quote generation system. The same thing is going to apply to airlines. The same thing is going to apply to any type of product search that you do on Google. And so the business over at Google is going to get even better from an ad perspective. And so even if traffic wanes, even if traffic starts to splinter off into the other large language model, Google is very well positioned to have ads that convert at a higher rate. And if they convert at a higher rate, advertisers like Geico and American Airlines and hotel chains and across the board, they're willing to pay even more for that traffic. And so you're going to have a lift of cost per click or cost per action over at Google, while maybe traffic declines or traffic splinters off into other platforms and other use cases. So Google's core business, the investment that they're making is going to pay off, very similar to how I see it paying off over at Meta. But I would say all four of these companies find themselves in a very unique position. If I were to rank the opportunity, and this will be the thing that we close on here. If I were to rank the opportunity, I would say Amazon has the clearest path to opportunity here. That is because they have an e-commerce business that is insulated by so many delivery networks and delivery systems. They have vertically integrated the entire e-commerce stack. The only thing that Amazon is missing are physical locations like a Walmart and a Target, but Amazon, given their scale and their reach, they certainly could go out and not only build that from the ground floor. There's plenty of empty commercial real estate that the company can move into, or it could go make an acquisition. You could go buy any number of different companies and transform whatever you ended up buying into Amazon stores or whatever. Amazon has the biggest opportunity to benefit from AI. They have the ability to not be at the frontier of the large language model. All they need to do is nurture it and be the resting place for it. And they're going to be able to apply that and layer that on to their e-commerce business. And even if they only experience a 1%, 2%, 5% uplift from AI, on a business that is generating $400 to $500 billion of revenue right now, as we sit here today, well, obviously 5% of 500 billion is an astronomical amount of money. And so the payoff for Amazon is going to be rather quick. Meta is in a beautiful position because its competition is not investing as heavily as they are. And they're going to be sitting in a spot 12 months from now when social media completely changes, where social media has gone from algorithmic feeding content to the AI generating and doing things for you inside of the application. Meta sits at a very beautiful spot there. Meta is going to capture that. I believe Meta is going to pull it off. And this is not me being a perma Meta fanboy. Many of you will recall when they pivoted to the Metaverse, I was disgusted. I couldn't believe it. I called for Mark Zuckerberg to get fired. The stock went down by 50, 60, 70% during that time. It was a dramatically bad decision by Mark. But the core business is super durable, as we've seen. And I believe this investment back into the core business over at Meta is going to pay off massively. The next company that I really like here is Google. The fact that they vertically integrated the entire business. They have the traffic, they have the chips, they have the data centers. They also have the training data as well. As it relates to image and video, that is still very nascent. It's still very early for image and video as it relates to AI. You can't make more than like a 7-second, 18-second, 25-second video unless you're willing to pay a ton of money. In the future, we're going to have full feature films, and there's like a ton of AI generated video out there. Some of it is going to be slop. Some of it is going to be stupid, but there's going to be a lot of that is going to generate lots of money. And Google's going to be at the forefront of that. Their models are going to be some of the best. And companies that want to generate AI video, generate AI images, they're one of their only choices, or their best choice is going to be Google. And they are also going to be at the frontier of drug discovery and other types, scientific discoveries as well. Google's going to be at the forefront of that. And imagine a large language model that creates a game-changing drug or cures an uncurable disease. If Google is the backbone of that, well, obviously now you're talking about a business that generates billions and billions and billions of dollars over many, many years. In fourth place, but certainly just of this group in terms of the opportunity and the work ahead, you have Microsoft. You have Microsoft that has Copilot that could become the quintessential AI orchestrating tool inside of an organization. But Microsoft's history, particularly over the past 20 years, is they don't build best-in-class products. And so will Microsoft be able to pull it off? That's the one question that still is on my mind. It's something that I'm monitoring on a daily basis. I will say, if Microsoft pulls that off, then the company will absolutely maintain its leadership position. The good news for Microsoft is, even if it doesn't pull Copilot off to be the best and baddest orchestrating AI product in the world, well, they've proven they don't necessarily need to do that. Will that be good enough, though, in the AI era, where you have competition from Anthropic and OpenAI and capabilities from Google and even Meta and other companies building, wrapper and other types of interfaces on top of these models? Will it be good enough that Copilot sucks? Will Copilot being the fourth or fifth best tool like Teams is, or maybe even Excel or PowerPoint is these days, will that be good enough? That's the question I have, and it's a hard one to answer with Microsoft. So I'll probably leave you there We've gone on long enough. Thanks for tuning in on today's podcast. As usual, if you have a topic that you want to send me, you can send it to me at team@myequityempire.com. I appreciate all of the subscribers, including Jamie, who sent me in today's topic. If you do me a favor, if you are listening to this on your favorite podcast platform, consider subscribing and leaving me a couple of stars. It could be 1 star to 5 star. I don't mind. If you're on YouTube, the thumbs up or thumbs down button is an option, and you can always subscribe to me as well. Leave me a comment and give me a suggestion for a future topic. I'll be back later this week with more. We've got other questions stacked up. I appreciate you all watching. We'll see you again soon. Until then, good luck with your investments.